All right, so this morning, April 11th, we open up, gap open higher, right? So everybody's bullish. Doesn't mean that we're going to go up, but I'm looking for a place where we could go up. Took a small loser first in this chop, and then we had a red right there. Where is it? 875. You see in the bottom right, chance to go up through there. Comes in again, 875, 9 even, right there, 9 even again. Actually, this is, if you guys remember, where I took my loser. The second 9 even came in, put them back out. Looking for an upside breakout. It's that simple. When I see these reds come in, any breach above them, there should be a release to the upside. So in real time, we said that's what should happen when they come in. And there were two targets. There was one around the open at 10 even, and the next one, it kept walking up to what? I think 1475, underneath those 15s. Be a liar to say I stayed on it for all the way to 15. I didn't, but got him, I think, till 12. Point is that sequence in here, when it got red, got it to go lower, fine, got red, couldn't get it to go lower twice in here. This upside was doable. Now, let me pause it. It's Friday. It's happy hour. I'm going to give you another real-time example. Only I can't do it because it won't let me fast forward it. Wait, maybe it will. What time was the other one? Right in here. Let's see. Let's see how this replay works. You know what? Let's just let it play out till around 9:15. Is that when the other one was? We'll let it just, let's pause it and go 10 times so we're not wasting time. It's Friday. We want to get out of here. So you see the market, they run up to 15. There was a big offer. They don't get straight to 15. I told people who were long, don't try to play 15 to get out of a long. Get underneath it. Don't try to be perfect, just close. When I was young, going to clubs and going to bars before I was married, I didn't go after the prettiest girl. I went after the second prettiest girl. So don't try to be perfect in your entries. Just get close. So let's just, this market's just playing out. It'll lead us to the next moment where the transition of, hey, this is a bullish session, right? Gap open higher. We rally after the open. Doesn't mean it's going to stay to the upside. When is the first moment you scratch your head to say, this could be a reversal? And it starts to come right in here when this red actually gets back to back to back red. I think it was in here. You'll see it when it comes in. We get back to back red that actually work at pushing it down. It wasn't in there. Came back on the other side. Here's the attempt to make a higher high. Again, I'm not saying it's bearish. I'm not saying short it. But when do you start to scratch your head? When the reds come in and it actually kicks it lower. And then there were a couple back-to-back reds that came in. You see some greens come in, can't get it to go up as easy. Another one at 13 even, green one. Here's where the back-to-back one started coming. If you want to stay bullish, you start to scratch your head. Should I stay bullish when you see some of these back-to-back reds come in? And that's what we were talking about. Let me keep playing it out. It's not going to get you short here and you're going to cover at 03. Life is good. It just begins to allow you to be careful with a bullish bias because we gapped open higher and maybe you missed the long. And if you missed the long, you're trying to get short. You're just seeing things when you're getting some back-to-back reds and they're doing what they should do. Now, that wasn't the 2-for-1 I'm giving you today. The happy hour is some chop that we were in to give you a sense that we were going to rally out of the chop. Or I'm sorry, break back in through the chop and break. While we're waiting, let's go to 30 times the speed. So we can here becomes some chops around some chop around 10 even. That's not even the chop I'm talking about. I didn't navigate around the open. The red line or the yellow line you see is what I designate as the open. Because it was the open. So more back-to-back reds that get it to go lower to start to get you to scratch your head that the bears might be in control. Market's walking down. This might have been the moment where we've seen the back-to-back reds, to be honest with you. Not before. It was this guy, if you guys remember. You guys in the room remember sometimes better than I do, but it's all about right side. Right side. Let it keep walking through. This is junk. This is chopping sideways. You could be long. I could be short, and we both lose money in this crap. All right, let's keep going. This is getting close, right? We're getting close to it now. So it looks like I'm going to share the computer sound here.
4 even. 4 even.
Looks like it could break out to the bottom, right? This congestion. And there's nothing wrong with thinking that. However, as soon as it gets back through this red, this 4 even, 4 quarter, you scratch your head about your bearishness. And even if you're short, could be a little pop coming. That's not the information. The information comes, it goes down to 03 right there, starts walking up right there. I paused it. 2 things to remember in context. Number 1, where do we come from? 2 points lower. Then there becomes a ton of buying imbalance. I'll play a little more. So when the 05s, 475s went bid, they ran in and bought a bunch of 05s, 2 points underneath. It's a bunch of shorts scrambling to get out. And once you shake out those last shorts, the buyers in here are embarrassed. It's like that someone peed their pants on the playground and all the kids seen it right away. Even the teachers are laughing at them. What does it mean? That means the downside could be the right side by stacking probabilities, but you got to be quick. If you notice it, you could see it. That's what reading order flow is all about. Forget all the other books you read. Throw those books in the garbage. Knowing the right questions to ask, give you an idea to get in, know to get out above there if you're wrong, to try to catch some downside if you're bearish. Now, I'm not saying it's that simple or that easy. It's just easier than all the crap that you probably read.
4 even.
Not that all books are crap, but most of them belong in the garbage. And then here's some downside, right? How much lower is it going to go? I don't know if it's going to go to 0 or not, but it's going to go back to your next target. That's your 2 for 1 on a Friday. Using edge zones, using when it should go up and it doesn't, when it should go down and it doesn't, when it should go down and it does. Those are the right questions to ask. If you want better answers, ask better questions. Stop looking at too much stuff. Distill it down into simple. If you're not simple, you're going to find yourself outthinking yourself and making bad decisions. If you like these videos, subscribe to them and notify yourself when I post new ones. Posting them so far every day.